What up, Hyperchange? Welcome to another episode. Today we're talking about Tesla's Q2 2020 earnings, doing a preview of what to expect when they report financials after the bell this Wednesday. It's that 4-time-a-year Super Bowl that Tesla investors get a look behind the scenes at Tesla's business, get to hear from Elon Musk and the management team themselves. So pumped for earnings. So I want to run through what I'm estimating financials-wise and also what sort of tidbits I'm looking for Tesla's management to discuss about the business, because we're going to get a ton of clues about what has been up with Tesla. So let's jump right into it. These are the quarterly vehicle deliveries that we got at the end of the quarter. Tesla was able to come through and deliver 90,600 cars in Q2. This was up about 2% sequentially. I mean, this blew away everybody. Like, I personally was expecting about 50 to 60,000 deliveries this quarter, just sandbagging myself, super worried about this coronavirus. The Fremont factory in California was shut down to start the quarter for over a month. I mean, this was looking like a bloodbath and has been for almost every single automotive company. Yet Tesla, put just massively resurge of production. Model Y is entering the market like crazy. Tesla's Gigafactory in China was ramping and offsetting some of that decrease in the US. And all of a sudden, they're able to post 90,600 deliveries, blowing away everybody's estimates, YouTubers and Wall Street's heading, at the beginning of Q2. So just to start, I want to say how much of a tremendous and awesome quarter this has been for Tesla. Now I know what you're wondering, how do we translate that into financials? So this is a spreadsheet. I'll put a link in the description that I use every single quarter to sort of do a rough guesstimate of how much the revenue and gross profit Tesla will generate based on their vehicle deliveries that are reported. So I've actually chosen to break out here the Model Y. As you can see, the Model Y, 1,266 deliveries in Q1, 20,000 in Q2. These are not official numbers from Tesla. Just want to make that super clear. This is just my estimate for myself and Mo at Hypercharts that we came up with. Additionally, Troy Teslike, he's an awesome Twitter account to follow if you want to get granular on these delivery numbers. But anyway, this is just an estimate, not official from Tesla. But so these 90,650 deliveries, I estimate how much automotive revenue that will do by putting in an average revenue per car and just multiplying deliveries per revenue per car. Pretty simple, but it works. And it's important to keep in mind there's a ton of things I can't calculate. Like there's, regulatory revenue from a bunch of different automakers that Tesla gets that's super lumpy quarter to quarter, not directly tied to, vehicle production. There's the amount of revenue they get to recognize from autopilot revenue. There's just a ton of different things that go into this actual revenue per car and gross margin leasing. But for me, it's just a rough estimate to get the ballpark of where the revenue will be based on that deliveries number. So last quarter, Tesla averaged about $58,000 in automotive revenue per vehicle delivered. That was actually up from last quarter, which was surprising given the Model S and X continue to go down, but I guess they had more Model Y performance. Anyway, so I assume that this comes down a little bit to about 56,500. That leads me to about automotive revenue of 5,100 or 5.122 billion, 460 million in service revenue. This is my estimate. As you can see, service revenue tied to supercharger use and a lot of other things was down pretty big, or was down, like had been increasing, but then goes down based on coronavirus, I'm guessing. And so I don't know, I was kind of assuming that less people driving superchargers, less people getting service and maintenance as everything shut down the first part of the quarter. So a little lower service revenue to 460 million. Energy revenue, I think, is still going to get hit really hard, just sort of conservative here, saying 275 million, way tougher to install solar and batteries with all of this coronavirus pandemic. And so that led me to an estimate of about 5.857 billion in total revenue. I assume gross margin of about 20%, which is lower than the 20.6% last quarter. Once again, just trying to be conservative here. And I get to about 1.17 billion in gross profit. So now let's go over to Hypercharts and see how all this translates into financials a little more granularly. So this is hypercharts.co/Tesla. This is if we toggle it on with my estimates, actually all through 2020, sneak preview here. I'll put a link in the description to check out my estimates as well. And so just before that, so remember that gross profit we were just talking about, 1.17 billion there on that 5.857 billion in revenue. And then in terms of operating expenses, I just want to zoom in and show you how I extrapolated this changing. We have 627 million last quarter, a little bit decrease in SG&A. I have that going back up to 700 million and then continuing to records of 800 million, stepping the foot back on that spending for Tesla here. Then with R&D, sort of similar pattern, back up, going to record 400 million by the end of the year. So I sort of wanted to assume that Tesla picks back up their expenses. I don't know if these are too conservative or aggressive. We'll see. But those are my cost assumptions. And then that leads me to my operating income estimate here of 121 million in the quarters. Just to make this a little clearer to zoom in, this is what Tesla's quarterly financials were heading into Q1 or heading into Q2. They had 300 million in operating profits on 6 billion revenue last quarter. Remember, I think it's going to get down a little bit. So we're looking at 5.9 billion with about 100 million of operating income. So as you can see, this is down a little bit. I'm expecting like a 5% decrease year over year in revenue, just pretty similar to deliveries there. But that profitability there on the bottom goes from a swing from a loss of 200 million to a a gain of 100 million in terms of profit for Tesla, at least on an operating income basis, because of cost efficiency, manufacturing efficiency improvements, just a whole bunch of stuff. China getting off the ground, Tesla getting more and more profitable on its core business, and I think we're going to see that carry through to the income statement, which is really, really exciting. But now here's what all of you are wondering: will Tesla report a GAAP income statement? Because this is operating income. It excludes a couple things like taxes, interest expenses, and those will add up to potentially make Tesla have a loss this quarter. So if you remember last quarter, Tesla had 283 million in actual income from operations, like I'm saying, but GAAP net income was only 16 million. So about a $240 million difference there between GAAP net income and net income. And so if a lot of people are assuming that if Tesla is able to achieve positive, post-positive GAAP net income this quarter, they'll be included in the S&P 500, getting that massive tailwind added to that index fund. But, my estimates are showing it might not happen, because if their, operating income goes down from that 283 to about 120, that 240 million difference is going to imply about a GAAP net loss of about 120 million. So that's where my numbers are at now. Remember, it's conservative, 120 million. It's totally up in the air. But here's the thing that's really going to move the needle for Tesla: regulatory credit revenue. So this has been something that, has not gotten too much attention. It did a lot earlier when people were saying, oh, the only way Tesla makes money is relying on these regulatory credits. Well, here's the deal. With every car that Tesla sells, they get this credit that is used by governments around the world to basically, that other automakers need to offset the emissions of their ICE cars. So basically, for every ICE car they produce, they're getting penalized. And for every EV car companies produce, they're getting this credit. So Tesla only makes EVs. They're getting all this excess of credits they can sell to other car companies who don't have the credits because they're only building ICE cars. And so the value of these credits is sort of correlated to the amount of vehicles Tesla produce, because they get one per car. So as you can see, I don't know, it's kind of been really lumpy for the past 5 quarters or 6 quarters, but then we got a huge spike. It's been between 100 million to 200 million. And then we got a huge spike to about a record of 354 million last quarter. A lot of people are implying that is showing this new credit deal with Fiat Chrysler that Tesla signed, where they apparently are getting like 2 billion in credits over a couple years, quarterly, starting kicking in 2020. That's my assumption of what's going on here. And that's about a 250 million a quarter times 8 quarters is about 2 billion. That's sort of a consistent thing that's going to happen for about the next 2 years or so. And so I think Tesla could once again get this 200 million year over year bump from fiat revenue. And if you remember, I was like, well, Tesla made a profit this quarter despite less revenue. I think a big swing the needle on that is going to be this fiat credit revenue. As much as people are talking about the car business, how many cars did Tesla sell, like this weird sort of back end accounting, governmental credit revenue is actually what's going to potentially move the needle on profitability. So that's something really important to keep in mind in terms of whether you're watching in the S&P or not. But does it really matter? To me, I don't really care that much about S&P 500 inclusion. I don't really care that much about regulatory revenue. Like, I'm invested in Tesla because I think this is a great business at selling cars, regardless of getting regulatory revenue, regardless of being included in the S&P 500. I think Tesla's a $1 trillion company just selling cars outright, and that's the value of my investment. So a lot of people always ask me, like, what do you think about S&P 500 inclusion? What do you think about the regulatory revenue? I'm like, it's great, but these are sort of like structural things outside the core business of Tesla. And what I really care about is that core business being more valuable, because that's going to drive the real value of the investment in the long term, not sort of S&P 500 inclusion or not. But anyway, that's me getting sidetracked. I do think Tesla will be able to report a small GAAP operating income this quarter, probably a small GAAP net loss. But now let's go into Q3 and Q4, what I'm expecting ahead. So this is what my delivery estimates are going forward for the next 2 quarters. And this is where I think it gets really exciting. This is why I think Tesla stock has been on an absolute tear, because that 90.6 thousand was great, but I think next quarter is going to be a blowout record deliveries. I mean, remember, they did 96,100 deliveries, 90,600 deliveries with Fremont shut down for a month. Now in Q3, we have Fremont booming, back up and running, not just with Model 3, but with Model Y exploding. We have Gigafactory China, which is also poised to have a record quarter. I think could add about 50,000 units delivered in Q3. Then you got, 90,000 from Fremont. Fremont's done like 100,000 alone. So I don't even think 90,000 for Fremont is that crazy. And we'd be looking at about 140,000 deliveries in Q2. And then I think they can continue ramping to about 185,000 deliveries in Q3 of this year. And just to go back to my spreadsheet here to show you how this all breaks down, 80,000 Model 3. I have Model Y going from 20 to 50,000 in Q3. I think this is like the biggest thing that's happening for Tesla right now is the Model Y is just totally shattering everything in the automotive industry and is going to be like the best selling car ever. In America, probably crushing the Model 3 in terms of best selling car by revenue when it really starts to get to launch and like anyway, that's my theory. And I think it's going to be a real cannibalizer for the Model 3. Like, Apple, they cannibalize a lot of their products, the iPod with the iPhone. This is just what happens with these great technology companies. If you don't disrupt yourself, someone else will. Tesla's disrupted itself with the Model Y. And I personally think Elon Musk has been very, very adamant about it not cannibalizing Model 3 sales. I think it will cannibalize Model 3 sales significantly. The Model 3 has crushed Model S and X sales. I think a lot of the theories about which consumers buy which cars because there's certain types of cars, I think is really backward looking logic and statements of like, oh, there's this many luxury sedan buyers, there's this many luxury SUV buyers, there's this many crossover utility buyers. That way we can calculate how many cars Tesla's going to sell. That never works. Tesla's shattering every norm. It's electric. I think it just totally changes what people think of when they think of vehicle categories. And I think so many people buying Teslas just want an electric Tesla. They just want a Tesla. And they were buying Model 3s, even if they didn't really need a sedan, they really wanted the Model Y, but there was no Model Y. So they just bought the Tesla. Now there's the Model Y. So I think there's going to be a significant amount of cannibalization, a lot more than the industry or Tesla management's expecting. Not actually a bad thing at all, because Tesla's just disrupting themselves with a better product. But that's something to keep in mind. So I think Model Y is going to start outselling the Model 3 if it doesn't happen by Q4 2020. Q1, a lot of that depending on China, but anyway, so I have Model Y ramping here from 50,000 to 75,000 by Q4, Model 3 going from 80 to 90. I think US, North America Model 3 sales are very weak because of Model Y. China is really going to be the driver of Model 3 sales here. Then we have S and X, which I have going from 5,000 Q3 and Q4 to about 10,000 in Q4 of the 5,000 in Q3 to 10,000 in Q4 because of the introduction of the plaid mode Model S. I'm sold. I think there's a 75 to 85% chance that on Battery Investor Day, Elon Musk rolls out with the plaid Model S on stage, and it's gonna be epic car. I think they actually are probably gonna drop the Model X too and discontinue that. That's something I've been talking about. So if that happens, I'll have to adjust these, but I think there's gonna be a huge jump in Model S and X sales with this new plaid refresh that's coming. So that's what I'm pricing in there. But anyway, I also, because of that, have the average selling price revenue per car going up to 58,000. This implies, over 10 billion in automotive revenue in Q4. In terms of other revenue segments, I assume service revenue picks back up as things normalize. Energy revenue picks back up as things normalize as well. I assume gross margin stays flat here at 20% just because there's so much that goes into this that's hard to know. Ramping programs, just regulatory credits, one-off things. I actually think there's a huge, tremendous upside for Tesla's potential of 20% gross margin, but that's just me. But I just assume that to be conservative. But anyway, now let's get into the fun parts. So let's see what this does for hypercharts. If you go to I plugged all these estimates into hypercharts. Here are the deliveries here, assuming those Model Y. Here are the revenue segments. I mean, Tesla's business is poised to absolutely explode here. So this is what it'll look like through Q4 with all my estimates. Let's just zoom in on gross profit here. Goes up to 2.35 billion a quarter, way higher than it's ever been. Tesla's core intrinsic profitability. This will lead operating income to go up to 600 million plus potentially in Q3, over $1 billion potentially in operating income in Q4 alone. So that's kind of what I'm expecting. Super, super moonshot. Remember, I did show you those costs that I do assume are going up. So much goes into this. I'm a little bit nervous. I'm trying to caveat this because all of my research is showing that, Tesla's, they're sort of at break even right now. So for so long they were losing money, then they were at break even. But all these incremental vehicle deliveries with their fixed cost structure are putting this gross profit right to the bottom line. And Tesla's operating margin is going to show massive improvements. This 1.15 billion in operating profit is translating into an operating margin of almost 10% for Tesla, up from 7% in Q3, up from the 2% I'm assuming in Q2. So Tesla's operating margin here, while the gross margin has stayed kind of flat, has trended massive positively. And I think, Ford, GM, traditionally these automotive companies are scratching pennies of profitability for every dollar in revenue. Tesla, by Q4 of this year, could already be doing almost 10 cents in profit for every dollar in revenue. This is way before self-driving. But when full self-driving costs $8,000 or $9,000 per car, not $20,000 or $30,000 per car, and we're already talking about Tesla being one of the most profitable car companies. So this thesis of the Apple of the automotive world, of Tesla shattering every norm and profitability for an automaker, is really unfolding like we've never seen before for any other company. And that's why this is defying all these valuation metrics. That's why people are like, oh, GM or Ford, Tesla looks so valued on a price sales basis. It's because they're about to shatter the record for profitability per unit of any mass market auto company for decades. And we're seeing that evidence. So I get nervous saying that and looking at these numbers because I'm like, no company would have ever done this. Like Tesla's going to be delivering at a run rate of almost 1 million cars per year to end the year, and they're going to be doing it at 10% operating margins. It sounds too good to be true, but I think this is, when I crunch the numbers, I'm like, tell me why I'm wrong. I think Tesla's about to get stupid profitable. And that's what we're seeing next year. So really, really exciting about all of that. But now let's caveat that with some bad news. Okay, or it's devil's advocate here. Tesla's recently started launching a lease for the Model Y. And so, Tesla has so many different demand levers. They also dropped pricing for a bunch of different vehicles that were not the Model Y. Then they did drop Model Y pricing in the quarter. Now they're offering lease pricing for the Model Y. So all these levers that Tesla's pulling seems to indicate that demand is sort of normalizing or maturing for Model Y. They've gotten through that backlog. Now they're sort of in a steady state sales in the middle of a global pandemic. And I think it's important to keep in mind for Tesla bulls like myself, like we always assume Tesla can just sell every car they produce. And so these estimates that you're seeing of me assuming massively ramping deliveries for Tesla, this is basically just production. This is me basically saying if Tesla, goes and keeps booming, production expands, they sell every car they produce, this is what deliveries will be. But I think there's a real possibility that at some point Tesla's going to, meet that demand equilibrium, especially with this massive global economic headwind, that could happen. So I don't know. That's just something important to keep in mind and be looking out for is like, where is the steady state demand for Model Y and Model 3? And the good thing about all this, what I'm really getting to is this, if you add all these up into an annual delivery chart, we're looking at 504,000 deliveries this year. And remember, so this is my estimates right now of Tesla is still looking like they're on track if they hit these numbers to deliver over 500,000 cars this year, which was their guidance. That was what Tesla said going into this year pre-coronavirus. This is going down all time in terms of business accomplishments for Tesla, the company that was infamous for not hitting guidance, for hitting targets that they couldn't achieve, to really learning how to under promise and over deliver, manage expectations with the market, figure out the Wall Street game, despite they're going to beat their guidance. This is unheard of for any company to beat their guidance in Corona, especially Tesla, the company who's famous for not meeting their guidance. So this is big. This is huge, huge deal. And I think all of this strength that I've been talking about is what's driving the share price. So now, countering some of my positivity with some negativity, let's go to energy installations because solar deployed. This is something that we've been waiting to bounce back since the acquisition of Solar City. The solar roof continually, 2 quarters away from being ready for mass market production and ramping like crazy, always around the corner, never happening. And that was supposed to happen in Q4, then Corona in Q1. So I've been really underwhelmed by Tesla solar installations. And I've been bummed because to me, this is, a solar roof, it costs you a Model 3. I think the potential for Tesla to get into the energy generation market and have just as big of a business by putting sun on every single roof in the world and giving us access to all this energy that hits where we're living every single day is huge. I think, this is one of the most biggest, I'm almost more excited about the solar roof than electric cars now. Because electric cars, done deal, did the Model 3, every car company switching. Roofs, innovation is still low. Solar innovation is still very low. Tesla needs to push the needle here. They have not found mass market product fit in solar, and I'm waiting for it. And so this is something I'm going to be really curious in watching. Unfortunately, I don't think we're going to get too much exciting news about this because Rona, I think, makes it very hard to install solar installation. So that is what it is. The Tesla semi-truck. This is something that I guarantee will get mentioned on I guess I can't guarantee, but I think will get mentioned on the conference call just because we've seen Nikola stock. I mean, Nikola stock has been soaring. I think the company's basically vaporware, yet valued at $20 billion for this hydrogen, sustainable zero emissions truck. In response to that, it seems like Elon Musk and Tesla had some sort of leaked email about really pushing for Tesla's semi-production. And now we've gotten more and more leaks coming out of that. It looks like battery and powertrain production is going to happen in Nevada. And there was even a leak that I saw Tesla Roddy just posted, or Clean Technico just posted, about the semi-production line coming together. So I'm also hoping that in this, new conference call, we also get an update on Tesla semi-production. It was supposed to be in 2020. Now they're saying 2021. Well, 2021 is coming up, especially when you think about vehicle production, you got to plan ahead. I'm really, really excited about the Tesla Semi, and I just think all this Nikola hype is going to make Elon want to talk about the Tesla Semi and hype it up. And so I'm really curious and hoping that we get an update on that on the conference call. Speaking of the Tesla Semi, one thing I thought was really cool that I wanted to mention is Tesla just dropped a promo in a Chinese video game, which has I don't really understand this out of my wheelhouse, but apparently this Game of Peace video game in China is a huge deal. Tasmania was reported that 27 million people play it a day. There's 400 million people that play this game, and they had this recent partnership with Tesla where they have the Tesla factory in the video game with the Tesla Semi delivering this secret box that then looks turns into this Model 3, and then it's going to be in the video game, and then they're going to have a couple different colors of unlocking the Model 3 in this video game that's huge in China. And so anyway, this is sort of a tidbit and me getting sidetracked, but this is so cool. Tesla, what other car company does this cool pop culture marketing stuff? I think this is genius. This is the way that Tesla's going to get into the cultural zeitgeist of China, the world's largest automotive market, the world's largest electric vehicle market. Like I said, Tesla's not just building a Model 3, Model Y production line in China. They're building a hub and a factory in this massive piece of the global economy that needs to be electrified. They're going to build trucks, they have a semi truck in China in this video. I was just talking about, like, they're probably going to be doing the semi in China, the Cybertruck in China. They just opened up reservations. Like, China is on the cusp of being a 20, 30, 40, $50 billion business for Tesla annually, potentially. So, and I think all this is coming together too on the conference call. So we'll hear more about that as well. Lastly, on this quarter, I wanted to touch on the cash flow situation. Cash flow is about to be extremely strong. Tesla ended Q1 with about $8 billion in cash, the most they've ever had in company history. They also produced way more cars than they delivered in Q1. In Q2, they delivered more cars than they produced. Remember, 90,000 cars delivered, 82,000 produced, 8,000 car overhang. That's all excess cash flow. I mean, Tesla's business already profitable and cash flow positive without that inventory excess, push. I think Tesla potentially could do another billion in cash flow, end the quarter with $9 billion in cash. I mean, the world's falling apart. Everything's crumbling. Tesla still has cash piling up in their company bank account. That is a good sign. That is something no car company, no skeptic, no Wall Street analyst expected a couple years ago when they were thinking about this company. We got one of the most difficult tests of all time, this unprecedented global economic shutdown that's tragic, that's, had so much impact and ruined so many different industries. Despite all of that, Tesla's emerged, reopened their factories. Production is on the cusp of setting a new record in deliveries in Q3. I mean, everything is I don't know. The future is looking brighter than ever for Tesla. And the numbers I'm crunching here to show a potential billion in operating profit in Q4 is just this final validation of the Apple of the automotive world bull thesis we've all been waiting for. I haven't even gone on a rant about the full self-driving, stoplight recognition, a little software revenue recognized from that. Maybe that's another episode. But anyway, I cannot wait for Tesla's earnings report. They're going to do the earnings Q&A on Say, so you can check that out if you want to submit your questions. I don't have any questions I want to submit this time. And I'm definitely going to make a video recapping all the earnings, so make sure to subscribe and tune in. Huge shout out to all of you watching the channel, because I hit 100,000 subscribers this weekend, which is epic. That this channel I started in my apartment talking about stocks is now my full-time job. And I have so much in the works. Hyperchange is we're just barely started scratching the surface, disrupting financial media, investing, all of that stuff. Have so much exciting stuff to share with you. So huge shout out to all of you guys watching, supporting, subscribing, especially the Patreon supporters, producers who made this channel happen, because 100,000 subscribers is I'm just blown away that I can't even believe it. And we're just getting started. Anyway, I'll see you guys next time. Peace out.